Let's get into this CPR report. Actually, look at the.
All right, yeah.
Let's look at the numbers. Matt, what were some of your takeaways compared to last month?
Okay, so not like amazing like last month, not horrible either. A year-over-year inflation is still trending down from 6.4 to 6.3 this month. The month-over-month change is 0.5, which is actually much higher than the 0.1% monthly change for the previous month. We're still trending downward for the year, but it's going to be bumpy. I don't think that it ever was going to be linear. There's always going to be, little variations. I am calmed by the relative decline, but then again, like if we kept having 0.5 for the whole year, that'd be a lot. That'd be a lot. So that's almost like what?
6%.
Yeah, 6% over the year. So we don't want that. The target's 2. I don't know if we'll ever get to 2, but still.
Yeah,
it means I was looking at this. I probably as a lot of multifamily investors do in terms of what does this mean for interest rate hikes, and
you look at the flour and prepared flour mixes.
Oh man. Well, okay, 0.6. Oh, that's kind of weird.
It's a deal.
Oh, 20. Oh my goodness.
It's a deal.
Yeah.
On flour and prepared flour mixes.
Yeah. Let's get it.
Anyway,
let's get it. I did look at the eggs index, or what amounts to it, which is at a mind-boggling 70.1.
We had some complaints. We did not talk about eggs as much.
Maybe we can have a special video just all about eggs and how.
Okay. So I wanted to mention something. I've been seeing Eggland eggs advertisements.
Oh yeah,
they are like pushing eggs harder now during this period. It's a shortage, but they're like no, you need eggs. Go buy your eggs. Everyone's talking about eggs. You can't get them. Everybody wants what you can't get.
Yeah.
And I don't know. They've
Profit
got some.
margins.
They got some good margins right now. They're exploiting. But I thought it was interesting that I'm like I've only seen so many egg commercials in my day.
Yeah, true. That's true. The incredible edible egg, that's classic. But they were up. The month over month increase was only 8.5%, which followed 11.1% eggs monthly increase. Still expensive, those eggs, but maybe.
Fresh fish also, just keeps going up.
Well, and that's actually the takeaway. So last month, actually, it seemed like groceries, which is food at home, I think is how they kind of phrase it in the CPI. Groceries weren't really growing at the same. They weren't really going crazy, but this year, groceries in general is up 11.3% year over year. Prices actually really spiked by 0.8% last month compared to 0.4% the month before.
This is important because this is like the money that's left over or not left over to pay rent.
Yeah. And I think you can core this out and say, and like there is a core because food and energy and gas are more volatile. The people always use the core inflation to say, actually inflation's like this and this, but that's people's experience of inflation.
People are buying groceries and putting gas in their tanks.
So like psychologically, that means a lot.
It makes sense from looking at a macroeconomic perspective to see generally how things are going, but for the actual how the consumer is feeling on an higher frequency basis, it makes sense.
And how many complaint calls are going into Jay Powell? He probably has reception is probably flooded with eggs calls. Please help us.
You think I'm sure he has I had to be one of those things that I wouldn't be surprised maybe he doesn't have a secretary or assistant.
Yeah, he just answers all emails personally.
Oh, yeah.
Anyways,
teams.
But more for like the multifamily side, the shelter is still high. We're almost there. We're maybe 2 months away, 2 CPI reports away from the 1-year anniversary of the interest rate increases from the Federal Reserve. So this is a significant milestone because interest rate movements typically take about 12 months to show up in the CPI's measurement of shelter inflation. And this is about a year. So it would, and I think if you measure market rents, we're about a year away from peak market rents before they started sliding as well.
Matt, did correct me if I'm wrong here, but did they increase the weighting of shelter in CPI recently from last month? Because I thought it was like 33. Now it's 34.4 on this graph. Did they switch that around on a monthly basis?
Yeah, I have no idea. I'd like to know.
Let's pop over and look at last month because I'm almost certain that shelter was. I know it was a third, but I thought it was like 31 or 32, 33. I don't. we'll find out. But it's even a larger share of CPI, which is part of the story, because if CPI is over a third is shelter, and their gauge to measuring shelter is incredibly lagging.
Yeah.
And I've actually been hearing more from financial reporters, including like the Bloombergs and CNBCs. They've started taking adjusting by taking shelter out.
Well, and I was
because they've all acknowledged they listened to the Gray Report.
That's right. One of the only longer takes that I saw as I was scanning the radio waves to hear takes on CPI was Professor Siegel from the Wharton School he had his own special formula that included like market rents and he had inflation decreasing because apartment rents have stagnated or really gone down.
And wouldn't that be a different story that everyone would be talking about?
Yeah, but I mean, like, to kind of go back to it, and we've talked about this before, and the way CPI measures rents, these are rents as experienced by everyone paying. It doesn't take in mind the decisions that they're making about rent, which is like market rents.
Yeah.
It just takes about like what's the burden on people's. So this is a view of the burden on people's wallets, but it doesn't really reflect where the market is at. I think everyone would really love kind of an alternative. Maybe there's another core version or something that we can look at. But.
Yeah, it's certainly in the lexicon, and even the Federal Reserve put out the whole white paper about different ways to calculate. So I mean, it's there. I think that they're relatively self-aware.
So I'm sorry for the specific numbers. Shelter inflation is up 7.9% year over year and 0.7% month over month, which is the same as last month, which also saw a 0.7% monthly increase. The rent of primary residence is up 8.6% year over year, and like overall shelter, had a monthly increase of 0.7% this month compared to 0.7% last month. We're not out yet. Again, like it lags about a year, maybe 13 months from like market rents, and we are approaching that threshold really quickly. And I think this is also something that I noted in my notes about renewal rents as well. So we'll see where this comes from, but we're going to see a little bit of a changed market like very quickly, because as high as rents went up, that's kind of how.
Yeah. I think just in context, again, if the conversation was about if we had a negative CPI with, a more accurate calculation of shelter, the conversation would be completely different. But not necessarily for the downside. I think it actually may be better and paint a more accurate picture, because then it would be less concerning of like inflation is out of control and rents are actually getting a little bit cheaper. It's a little bit easier on individuals. Gas is a little bit cheaper. And then it's like, then maybe the Fed maybe not they're going to lower rates, but maybe you can see that picture come into clear view of more of a plateau and normalization. And then, who knows what, when they're going to dial it down, over time when they feel very comfortable.
1 year.
It's either going to be, like kind of what they did, taper tantrum post GFC, and then they're feeling good enough, and then they try and people freak out maybe, or that was kind of that was the opposite of they started raising rates actually. But it's people are it's either going to happen gradually, lower it down over time, ease it off, or crisis. Usually it's crisis.
Yeah, that's what they want.
Bring them down to zero, and they've got plenty of ammunition. Like, if they want to stimulate the economy, they got plenty of ammo. I mean, the concern prior was like, where are they going to lower it from? They don't have any room to lower.
Yeah.
They got plenty of room.
Yeah, that's true. And like, it's depressing looking at the chart of federal funds rate. It's like, it's either at high or zero. They're either shooting for the moon or they're going underground. There's not, I'd like a little bit of like, can we feather the accelerator a little bit?
Some feathering would be nice, like a lot of throttle. Think through this, the concern would be if there's a crisis, you can turn the housing market back on in a second by lowering those rates. But if you actually haven't stamped out inflation and you're blowing oxygen on the fire or pouring jet fuel on the fire, all of a sudden you can get a flare up, and all of a sudden you could have rampant inflation all of a sudden when you thought that you had tampered down. So that's the concern, and I think they are going to be a little. We're always fighting the last war, right?
Yeah.
So I think they're going to be a little gun shy on the next crisis. But
Yeah, that'll be really
Only
interesting.
time will tell. Hopefully that's not for a while and things are relatively smooth sailing, which I frankly think, I think, again, there's going to be some volatility, but I think we're going to
It's the bumps that give me a little bit more confidence than this like streamline. If people were super eager to keep spending and like things are really going great, and we don't have any bad signals, that makes me worry a little bit. But if there there's
a little bit, I think it's relatively balanced. There's some of that going on, but not
people
enough.
are talking also about like the idea of like a rolling recession or something, and certain industries are having layoffs, and then there are certain areas that are doing better than others, and that maybe I would definitely like that than a wholesale recession that's caused by this kind of all or nothing. You'd think that there's maybe some more thoughtfulness,
but it's even hard, and I think that it's appropriate that we're in some kind of rolling economic period, which we always kind of are, always transitioning from one place to the other. But we're transitioning, but we have to get through it, get to the other side, and take it one day at a time.
We had
listen to the Great Report,
for sure.
Which if you can subscribe to the Great Capital YouTube channel, you get updates all the time. The newsletter, if you're not signed up for the Great Capital newsletter, hop on over to greatcapitalllc.com/newsletter. Updated every week. It's great.